All right, guys, giving you a midweek commentary. So once we start boot camp, you guys will receive this throughout the week. Um, so we'll give you a weekly outlook, and then in the middle of the week, we'll kind of go through, explain what has happened in price, and then kind of help you guys model, um, you know, how to kind of go through a week and adjust as price is delivered. So we came into pound USD this week, right? Obviously, the weekly opening price was here. We saw Sunday, Monday trade higher. All right, this is all inducement and only to create a market maker buy program, right? So I'll tell you guys, every week you show up, you start out with your weekly range expansion, right? The most probable weekly range expansion, and then from there, um, all you do is you think market maker buy sell program, all right? And once you identify the PD array that could become the catalyst, right? In this case, the PD array that becomes a catalyst for the week is this daily fair value gap. So we'll mark that daily fair value gap out, all right? And now here on that 30-minute time frame, this was Tuesday. I mentioned it in the chat during live price action that I wanted to see price deliver lower. So we had Monday pushing here, and then we transitioned to sell side of the curve after Monday pushes up. Now we're on the sell side of the curve, and right here we had a 4-hour sell side imbalance. Okay, so the whole premise of trading on Tuesday is that, hey, we want to allow price to get under the weekly opening price. Why? Because we're in a bullish market. All right. So now I can short, right? I can take a counter trend move simply because I know that um, IPTA will want to reprice under the weekly open, right? Whereas we can measure premium and discount for the week, right? This would be considered a discount. All right. And then what we have to do as traders is see if order flow transitions from there. All right. So right here, um, kind of mentioned to you guys the other day as well. If London doesn't go anywhere, right, expect New York uh, to manipulate London. So it's almost like typically we see the Asian session, accumulation, London manipulation, and then distribution, and that carries it to New York. Well, if London goes nowhere, then we're going to view London as a accumulation, whereas New York is going to manipulate it, then distribute. That's exactly what we got. All right. Now, if you were wondering during the chat or during price action why I was mentioning, okay, so we had price trade lower, all right, and there was SMT. So let's point this SMT out. Um, so we had SMT between Euro USD and Pound USD, all right, which is key whenever we're seeing price respond to a PD array, right? Looking for signs of SMT is very vital. So we have that cracking correlation, which is why I'm like, okay, this high should be protected at least until we run to sell side liquidity, all right, or get into some type of more significant terminus, which in this case was under the weekly open. Now, um, on Tuesday, I wanted to see price stay within this portion of price. All right, and once we start, you guys will understand. Um, but all of this was just manual intervention. All right, this is all inducement just before 10 a.m. news. All right, this is news at 10 a.m. and then price drops out. So anybody who was short here, all this did was just squeeze anybody out who thought they were sure-handed. All right, and then price delivers lower. So now that we're down here, we're under the weekly, the weekly open. If you think about time and price, all right, it's Tuesday, right? We're creating a Tuesday low of week, potential Wednesday low of week. And what we have to look for as traders is visually, we need to start splitting the chart in half because every move that happens, guys, is a market maker buy or sell program. All right. And once you understand that and you understand how to divide the sell side and buy side of a curve, it becomes simple, you know, as you understand the PD array is going to be the catalyst. All I have to do is know how to distinguish if price has actually made it to the opposite side of the curve. So if you guys look here, blending time and price. All right, first things first is we start clearing out sell side imbalances, right? We're clearing out sell side imbalances here. And then you should notice that down close candles, right? These guys start supporting price. So if I blend that concept right? This would be our smart money reversal. If I blend the concept of order flow, power of three, right? Monday, we accumulate here, we manipulate here. Now we're getting ready to distribute. Well, if I'm looking at this from the stance of daily profiles, I mentioned to you guys, if you're trading the London session, the easiest way to trade New York, I mean, not if you're trading London, but the easiest way to trade New York is to get familiar, very familiar with London's price action. All right. London's created buy side imbalances, which are also backed by down closed candles. Then that means we're probably going to get a classic buy day. All right. So I took buys in here. I just opened the stop loss up. Okay. Because price has already gone through, I guess its cycle of accumulation, right? We've manipulated down under the weekly open. Now order flow transitions over. I'm also taking into consideration a classic buy day profile, and I'm able to just take longs in here. I didn't even have to get super precise with this. You don't always have to have precision. You don't always have to have a trade that goes more than 2R, because you can do a lot of damage with just 2R with a 50% win rate. All right. But anyways, so that was the reasoning behind this trade today. Now Euro USD did not move. I saw somebody ask me why. There's no reason for that. The only reason could be it's just time distortion, right? Which just means that price is purposely stalling for um, a much more significant event. Most of the times a red folder news release, which on tomorrow, Thursday, we have CPI. All right. So we were telling you guys this is the target. This was one of our targets for the week for pound USD. We've since cleared that target. Next target should be this area here. All right, 28950. And we should see CPI take us to 28950 on tomorrow. Okay. Let's go to New Zealand CAD, because I had an idea on New Zealand CAD for the week, and then we had those guys had an interest rate release yesterday, which completely dismantled that. All right. But if we look back, the reason that I'm wanting to be bullish as we're coming into the week is we have a monthly fair value gap, right? Weekly fair value gap that we've reacted from. And right here, we traded higher and we cleared out and closed above these down close candles. So that makes this an order block. Okay. Now, what I'm looking to do inside of here is I told you guys I want to see price trade under the weekly open, and I was looking to buy up under here. Okay. Now, I can't control, none of us can control price, and we sure as heck cannot control any new news release. So, um, yeah, it's nothing you can do about that. All right. Only thing you can do is just adjust once it happens. Now, the point I really want to make about this is the reason that I always harp on order flow. Okay. You guys might get tired of me speaking about order flow, but order flow is literally the one thing in price that almost never lies. And here's why I say so. Many a times we take into consideration just, like, oh, price has cleared a structural point. All right. Well, even though we've cleared this structural point, what occurred before that structural point was institutional order flow, up close candle support and price. So structure, right? If we had a on the scale of the or hierarchy, structure is not going to be more superior than order flow itself. Okay. So what I mean by that is here, yes, we clear out structure. However, there's not one instance that where we're saying down close candles are supporting price, or where a down close candle forces a new change in the state of delivery. All right. So this is a teaching point here. I just like to kind of scan through price. So in these midweek commentaries, I'm not just going through, giving you guys play by play. I'm just finding moments that are teachable, and things that we can actually build upon, and maybe take uh, throughout the rest of the course of the week. So that was that. Let's also go to I think Nasdaq had a pretty decent moment for the week. So obviously we came into the week, and I'm telling you guys, the only thing you can do with indices right now is trade those internal to external range liquidity runs. So right here we see a market where down close candles are supporting price. This is our current dealing range. All right, and then we create a down close candle right here. All right, so if you're trading this today, okay, what you should be thinking and considering is looking for bullish opportunity, not trading against institutional order flow. So if you went short, I had a call, one-to-one call with the student today that just started, and he went short inside of here. All right. And once we went through order flow, we understood that he was going short against institutional order flow. Right. I mean, what are the probabilities of price running through this down close candle? And this is where in boot camp, you guys will hear me always harp on the fact that, hey, framework, which would be this higher time frame stuff, right? 4 hour candle support and price framework has to improve context. So the context that he was seeing was on a lower time frame, right? And he traded because the fair value gap was placed into the market. But this framework does not approve the higher time frame context because he's shorting into down close candle. And what happens is he gets this reaction. Okay. So to fix that, if he were viewing price from the correct angle, all right, or the correct lens, what he looked for is bullish opportunity. Now, I will say this was seek and destroy. All right. So even if you short it here, you lose. Even if you buy here, you lose, right? And if you short from here, maybe you get break even, right? And that's because it's a seek and destroy. So don't waste time trying to find the magic answer for this. The only thing that could have been done if you would have hung around is this is our 4 hour candle, all right? And if you trade indices, then there's no way you should wake up and not have S&P 500 and NASDAQ on the same chart, all right? If we go to what we view as a pre-market session, right? Literally right here, you guys can see, so this would be the low. All right, so this would be the low, and there's a cracking correlation here. All right, so there's your cracking correlation. Now, so you have, sorry about the long guys. So you have a cracking correlation. All right, and that cracking correlation, once we sweep the lows here, the S&P 500 is too strong. We're not even able to create a new lower low. All right, and then price trades higher. All right, so you do have a structural shift here. All right, fair value gaps are created. Okay, and this is the advancement, guys. You don't have to wait for price to come back to the fair value gap. That's not why you're interested in the trade in the first place. The reason you're interested is because the fair value gap was created. All right, it shows a form of intent, right, or a sponsorship. Okay, but this would have been a nice move had you identified that SMT, right, to then continue in the direction that price is already flowing in. Okay. Here's another great teaching point. So let's go to CAD CHF. Let's back out of this 4 hour chart. Right. So we had daily. So CAD traded into a daily OB. Right. So you have a daily. So order block combined with the fair value gap. All right. There's always going to be a strong combination. Now, that doesn't mean to just always take that execution for face value, but what it does mean is that that area, right, the reactions from that area are a lot more sustainable or durable. Now, this is a great teaching point, guys, because when we came into this week, all right, I had the same idea. Hey, I want to see open, some type of open high, low close, or I want to see price trading under the weekly opening price. Right, I'm not sure why it's not printing on the chart. Right, so weekly open is right around here somewhere. But anyways, the teaching point here is this. Okay, this is a liquidity void. Okay, there's not a lot of there's a straight downside delivery within this range. All right. So as I'm watching this, okay, I'm not gonna take um, I'm not gonna take. Let's look here. So this creates a breaker like scenario, right? So we go short term low, intermediate, we expand, we create buy side imbalance, okay, and then we start pushing up, and then you start seeing down close candles start supporting price. All right, but the reason that I'm not, and you guys will learn why later, but the reason I'm not interested in this is because out of a sample size of scenarios, right, I've learned I can't trust this scenario. Why? Because I'd rather see price trade into one of these PD arrays, right? And if these PD arrays hold, right, then I'll see a transition in order flow. If these PD arrays aren't going to hold, I'll see a slight reaction, but then that reaction will turn into a reaccumulation. All right. So now at this point, And I'll show you where you could have taken executions on this. So let's say right here in price, right? You don't know what price is going to do to this range, all right? All we know is that this was strong sell side delivery, right? I don't know if it's going to turn from this fair value gap, this fair value gap, or if it's going to turn from the fair value gaps at all, right? The only thing we can do is trade the response at the PD array. All right, that is the advancement. So as I'm watching this could look like, oh, price is turning around, right? Let me move this back to Forex. 1 second. All right. So right here, this could look as, we've run to a 4-hour fair value gap, and now price is turning around, right? London session, Judah swing, 1 at 1 a.m. We trade lower, and then this turns into a Z day, right? Turns into a Z day because they're just prepping up sell stops for the next day, right? This is a true Judah swing, and then we get an expansion. Now, what I'm saying is I'm not going to, certainly I'm not looking to short because we're in a bullish market. All right. So I don't care about this. Right. But what I'm saying is I'm not taking this scenario. And the reason I'm not taking that scenario is because, as mentioned, there's always a market maker buy or sell program. But with on this side of the curve, what I want to see is I want to see some type of structural points or some type of delivery, right, that allows me to gather information and make decisions. All right. If it's a liquidity void, then I can't take this because most times what this will become is just a short-term low, right? We'll get a move up as inducement, and then we'll take that short-term low. And now I can use this as my last phase of redistribution. So it's always better to find the last phase of redistribution, last phase of reaccumulation, which we'll go deeper into um, a little more deeper aspects of that. But it's always better to locate that because those areas will oftentimes uh, become just the inverse of what they were before, right? So right here, once we trade lower, we take out previous day's low. Okay, this becomes pretty much a dealing range. What I'd like to see is price come back, rebalance, and then redistribute. We have equal highs here, and then the previous week's high is right here. All right. But as soon as price trades and it closes above this point, right, there's a change in state of delivery, and executions can be taken from here, right, to attack those equal highs, right? Reason being is because we just saw price clear out previous day's low, right? We saw it break this order flow that tried to settle in, and then we close above the down close candle. So this becomes an order block. The order block itself is the change in state, right? Look what's also included. There's sponsorship. Okay, so even if you don't enter here, right, you can enter here. Okay, but I wouldn't trust entering here. I'm the type of trader I prefer to get filled, right? I'm confident in my ability to read the tape, and I don't have to wait for price to come back here and then move. All right. So yeah, that's another teaching point from the week so far. Let's go. So GBP CAD is actually, I'm actually inside of that now. All right, so let's move all this stuff up. All right, now GBP CAD. This is what I was mentioning to you guys earlier. So this would be like an old area of redistribution from a daily time frame. All right, this area, right, is reclaimed once we get to the buy side of the curve. This area becomes the new area of reaccumulation. Right, so I'm expecting reaccumulations from inside. I'm not going to go into the execution inside of here, but the foundational aspect is that I'm in a bullish market, right? There was SMT with New Zealand CAD and pound CAD. So there's a fair value gap SMT where one asset didn't touch into the fair value gap. All right. Swing low fractal is formed on the weekly. We tap into the weekly fair value gap here. All right. Then we go to a 4-hour time frame and we can see a clear market maker program. So this right here would have been our balanced price range. All right. Trade below it, trade above it. This creates a dealing range, all right? And now what's most important is what you guys should see is order flow. So we'll split the chart in half. So anytime price runs into a PD array and reacts, split the chart in half, all right? And start to distinguish order flow. Over here, you should see up close candles and sell side imbalances supporting the direction. Over here, you should see down close candles and buy side imbalances supporting the direction. All right. So clear market maker buy program uh, targets here, and then ultimately I want to see us get to 7,600 on this pair. All right, but this is a beautiful market maker buy program. Uh, so without me going into executions here, this looks just like pound USD. All right, so just take the explanation I gave on pound USD. There is a form of SMT in here as well, and all prices doing right here in the New York session is coming back inside of this fair value gap. All right, now I'm not saying we could have planned for it to come right back to that fair value gap, but that's this is what it did. But most importantly, you can see the down close candles start supporting price. All right, see if there's any more teaching moments from the week. Oh, oil. So I gave you guys oil today. Let's go to Brent. I mean crude oil. So I gave you guys this today. What I was saying was, we came into the week and I said, hey, I want to see price go open, low, high, close. The biggest question was, okay, and once we start, you guys should see this delivery is a balanced price range. All right, just look at the delivery within the candles. It's a BPR. All right, what price does, it comes to fair market value. Okay, so now what I was saying today was that, hey, I probably feel better if we respond to the weekly fair value gap, because most times if we leave a PD array, then I really like to see some type of SMT. All right, but there was no SMT between the two. But what holds this up is the fact that we have balanced price range. All right, now in hindsight, we're seeing that, right? But I would have felt better if we had actually run into the weekly fair value gap. But anyways, beautiful market maker buy program here. We trade down into a balanced price range. All right, this is balanced price range. Look how much time they spend inside of this. We'll go deeper into it once we start. But this is what I mean when I'm saying, hey, find the last phase of redistribution or the last phase of reaccumulation. All right. So if you go back, if you can pause this video and rewind back to where I'm speaking about New Zealand CAD. No, I meant CAD CHF, right? The 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 range of price as price is moving down in crude oil is much different than what we saw in the CAD. See, now on this side of the curve, I have a lot more to read and make decisions from. All right, so we get down, we take out a previous day's low, we're right on top of a balanced price range, and then right we see a swing low fractal form, so a short-term low, intermediate, right? We see speed, okay? We trade and we close above right here. We trade, we close above those down close candles, making this an order block. The order block is the change in state, right? And then we trade down into the order block, failure swing, right? Giving us speed. So I'm not just saying speed just to sound cool, right? I'm saying speed because that is what I want to see. If price is responding to a PD array that supports the higher time frame direction, then if I see speed on a lower time frame, it's almost like that lower time frame is being supercharged by the higher time frame PD array that is already in supportive price. So I'm seeing a failure swing created, swing low fractal created, down close candle supporting price, and right here is a fair value gap. All right. And so what I was mentioning to you guys earlier is I said I wanted to see this candle close. I didn't want to see rejection blocks created here. I wanted to see it close through this BPR. All right, we closed through that BPR, trades back down into fair value gap, and I could forecast that I'd like to see us run up to our targets of 84547. Okay, this is beautiful because we're under the weekly opening price, right? We'd expect buying opportunities under the weekly open, and then we also get under the monthly opening price. All right, so 84550 is where I would like to see us run to. Let's continue to scan through. I'm not sure if there's anything else that was like a standout moment from the week so far. Mm, no, not yet. Let's just take a look at DXY and see where we are. Yeah, this is messy. I'd predict that this might get even more messy as we get closer to election time. Um, but this is a piece of crap right now. Bun. Okay, the only thing I can say about the bun is that we've actually closed back above this volume imbalance, which is nice because if we close above the volume imbalance, then that means we should see support from this area. And if we're seeing support from that area, then that means I'd really like to see this clearing out these equal highs potentially to here. And I'm kind of seeing this now as to be honest, I'm kind of seeing a short-term low, intermediate, short-term, whereas we're creating another intermediate, which will make this a long-term low. But yeah, if this is the daily chart, guys, and what we really need to see is you see this down close candle. We need to see price close above that, right? So if we react to volume imbalance, we close above here, then uh, that would certainly make me more confident seeing price right here. But the dollar is messy. I'm not gonna pretend to be a rocket scientist and know every single move here because it's messy and I'm okay with if it's messy and I don't really know. This is the yield and it is very messy. So um, all we can do is respond to those little fragments of obvious moments from the dollar. And pound USD kind of gave us that. It was pretty obvious in here, and we'll go here. But for Euro USD, I don't really know why we haven't moved beyond the fact that CPI is tomorrow. So we'll see what CPI provides. Copper is let's move this all the way. So copper was something we were looking at for a few weeks and traded down into this monthly fair value gap. And now you guys can see market maker buy program. We clear out. All of this is cleared. Let's take the bodies. So we clear that out. And now we're looking for reaccumulations here to send price high. But that's all I have, guys. I hope you find insight in this. And we'll keep pumping these out throughout the remainder of this orientation. And we'll see you guys in boot camp.